Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep. With your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel here with Joel Elconin and Dennis Dick on today's show. Market a little bit undecided about what it wants to do right now. We've got some positive news overnight from NVAX, and the White House is talking up reopening the economy in small doses, and yet there is some weakness in China, another potential financial fraud, and that's causing some weakness in smaller Chinese stocks this morning. So we'll talk about that. We'll talk about Pinterest here. We'll talk about FedEx and UPS up on an Amazon headline. Our guest today, Paul LaMonica, digital correspondent at CNN Business. He would join us at 8:15 in just about 13 minutes from now. Joel, tell us what's happened here in the overnight session.
Quiet overnight range here, only 60 handles, folks. Week close, you had to follow through a little bit overnight a few times, and they really tried to bust it through Tuesday's low, 26, 23.50, but they could only do better than 26, 20.75. So even though that was a bad close yesterday, we do have a double bottom underneath. 26.80.50 is your pre-market high if you're looking for continuation. Like to see us work our way into the 2700 handle. Don't know if we can get to yesterday's high at 27.50, but a close above 2700 I think would be a win for the bulls today. Crude up 69 cents at 24.32. That kind of had those gains after, in the after hours yesterday. Double bottom in crude at the 23.50 area. So you crude traders, keep an eye on that. Gold in the red by $3. Took out yesterday's low, but back above it. Quiet range in gold. Silver down 17 cents, but still above $15 at 15.31. And Bitcoin, just not as volatile as it used to be. It's up $45 at 7,375. Those are the Bitcoin futures. So Triple D. How is that close? How is that close?
Interesting. And again, we keep seeing the same thing, people on, CNBC, if they're asking, and you see people, oh, what was it, that 350 move? We've been telling you, watch PreMarket Prep. We've been telling you what the 350 move is. It is the closing imbalances. We had Jonathan Corpina on the show yesterday. He was saying the same thing that I've been saying, there's no early look. So that new information comes out. And if it's a lot of sell imbalances.
Dennis, explain early look.
Okay, so Jonathan was talking about this yesterday. So how the imbalances work, these are the closing imbalances. So what a closing imbalance is, it's mostly a lot of institutional flow. They're sending what's called market on close orders or limit on close orders. So they want to be executed on the closing print. The total. So if I send a market on close order in FedEx for 1,000 shares, just a hypothetical example, there's no other orders at 350, it would post my minus 1,000 shares would be the sell, because there's a sell imbalance. There's somebody to sell the stock on the close. So that's, just, the quick, of how it works. So you have a lot of institutions that send 50,000 shares to sell in the close, 50,000 to buy in the close. They're just jockeying their, updating their portfolios. A lot of institutions like to trade on the closing print. So typically those orders start coming into the system earlier, and the designated market maker on the floor, when they're there, starts, bringing those into the system as early as 2 o'clock. And the DMM can see that. And the floor brokers can see those orders ahead of time. So they get a feel for where they are, and they're like, okay, well, we've got a big buyer. They can say, hey, I'm going to have a big buyer in UPS here at the close. Do you want to provide some liquidity to that? I like 330, they can feel it out and say, look, we got some huge buyers here. We're going to need some sellers. So they're, it's like manually done, like, and it's obviously some automation involved as well, but there's a feel out there. And Jonathan was saying the same thing. So everybody has that. You can actually subscribe to the early look too. So it's not just like it's floor broker information, but it's done by human beings on the floor. Without the floor, all those closing imbalance information, there's no early look. So nobody has any idea at 3 o'clock where they are, any idea at 3:30. At 3:50, it comes out. It's all new information to everyone right now. So 10 minutes is just simply not enough time for the floor to or for the market to adjust if there's a huge sell imbalance or a huge buy imbalance. The market's scrambling to adjust to those prices. High frequency traders are all over the 350 numbers because they're going to slam whatever bids are there, because they obviously, the stock's got a huge sell imbalance, probably going down the close. So I'm going to hit the bid initially. That's why right on 350 you see the high frequency traders slam them either way, depending on what that number is, because they're going to price in that new information. But if we look yesterday, a lot of sell imbalances on the closing sell imbalances. So stock, the stocks are trading around 269 SPY. Within seconds, we're down to 267. Then we continue to fall all the way into the close. And if you look, like, wow, like what happened? Well, it was the sell imbalances that happened. And there's simply just not enough time. If they're too big, there's not enough time for everyone to really pair off at a good price. And we watched the S&Ps fall over 40 handles just because it was sell imbalances. And it wasn't even like they were huge. They were big, but we've seen way bigger. In a normal market, it would have been a non-event. But in these markets, first, volatility is up. There's less liquidity out there. Secondly, though, there's just not the floor brokers there to take the other side, to cushion the blow. So it's tricky. I mean, yes, they can trade electronically. Yes, I'm sure some of this stuff can be done, but I'm sure it takes time for them to develop systems for that as well. So there's a lot of, a speculation on my part on exactly what's happening here. But what is not speculation is that these 350 imbalances are significantly moving the price, which they don't normally do.
So I've got a 1 minute chart up here at 350. We were at 269 in SPY, 269.
Yes.
I'm sorry, 266. And
no,
no,
we were
I was right.
269.
Yeah.
Yep.
And then all the way down at the close, we closed at what, 265?
265.
So,
we lost about
yeah,
40 handles on the S&P if you're talking S&P futures. We lost about 40 handles on the close. It's an impressive sell-off.
And
very
it's a
impressive.
coin flip too. I mean,
it is right now because nobody has an early look.
Yep. It is. And, I kind of felt it yesterday that it might be sell because, we had a couple big up days and then, and then we had a nice up day, but then we gave some of it back. So I've been able to catch it a couple times. I was not able to catch it yesterday, but it's like, you're going to lose, I'm sure you're going to get roasted on a stop in the S&Ps if you do that. And you usually can get, within a tick or two, or I don't even think I've had a stop worse than 2 or 3 ticks during this whole thing. But I bet you something on like that, you can't use a stop limit because you want to be out. And so we'll see. But the thing that also, Dennis, that you talked about was, a lot of the people that absorbed the buys, it was hard to hedge because we continued to go down. So you couldn't get, delta neutral because of the market keep it going down. But
well, there's follow through on them sometimes. On a normal day when you see the market fall 40 points on just sell imbalances, you're going to get a bounce after the close. A lot of these stocks, it was just order flow. This wasn't fundamental information. It's order flow information. Usually they bounce back. That did not happen last night. It's bouncing back this morning, but right after the bell, we dropped 40 handles, then we dropped another 15. So people who are buying the close, I bought some stocks in the close, are all of a sudden scrambling for hedges, scrambling to try to, get yourself hedged up because, if you hit SPY right at 4 o'clock, you'd been fine. But, I do a little bit of anticipating, I think we're going to bounce off it too because all these stocks close on low. So I buy some stocks on the close and boom, they keep going lower and you're like, whoa. I got to do some quick scrambling and some adjusting there. So, I mean, there's so many, and obviously the markets are, try to price in all information as quickly as possible. But in the case of the imbalances here, the moves, like Jonathan was saying yesterday, and Jonathan Corpina, obviously a floor trader, and he was saying yesterday, is that the moves, once you see that 350 direction, if it's their buys or sells, it seems to continue to go that way for the full 10 minutes. So, I mean, I guess there's trades in there for you day traders out there. And obviously, we saw some significant moves after 350, but, the initial move had to be 20 handles down in the first second because the high frequency traders are so fast. But then, it's like adjusting and other traders are coming in there and trying to trade them as well. And, for the most part, those orders have, had a lot of follow through. So it's just that the dynamics are a little bit different because we don't have the floor brokers.
Yeah, and we don't know when we're gonna get our floor brokers back.
I
Also,
mean, this has been an argument by me, and before, and saying, the floor is just a CNBC TV studio, and we don't really need the floor. I haven't said it in those words, but I've said, most of it's done electronically, and the floor brokers don't do nearly as much as before. But I tell you, on the close, it's proven me wrong. I mean, these guys actually do cushion these, dampen that volatility at the close. The early looks help. So I don't know.
For years I've been saying, man, if I had a piece like that to do on the close, or like if I was an institution, I know they can't change it, man, I'd be working that thing. It starting at 3:45. If I had 100,000 to go in something, I'd do 20 and I do 50. I just wouldn't, but they were, they need the mark, and they're not going to change their systems.
Some of them need the mark. Yeah. And yes, a lot of them have executed on the close for years in that way, and the liquidity has always been there. And, obviously, institutional flow is what really drives price. People think everything's driven, by bots, and it is to a certain extent, but it's usually the algorithmic institutional bots, using different types of orders. It's tricky. Traders are creatures of habit, so they're not going to change all their habits in 3 weeks because we're in a different market too. But all we can say is, if you're in stocks and you don't want a violent move, get the hell out before 350, because right now the moves after 350 have been very violent.
Yeah, that's for sure. Dennis, you get them on your Ready platform. The imbalances.
You can get them on IB too.
IB, okay.
Yeah, IB has them. Yeah,
what about what's that one service? Is it Rosenthal that you mentioned?
Rosenblatt has the early look, but I don't know if they're even operating that right now because they got no floor broker to give you the early look. So like I said, that early look, don't think it's like hidden. You can get that as regular traders too. Right now there is no early look though, because there's no floor brokers to give you that information. So, but Rosenblatt has a service that they give that they provide that too. It sounds dirty when you say an early look. The reason for the early look, though, which is public information still because you can subscribe to it, the reason for the early look is so you don't get these violent moves at 350. So it's that early look that the market is missing here right now, because when you have 2 hours to digest this information, you can slowly work orders, and you can figure it out a little bit better. Like I said, we got a huge piece to go on the close. DMM can talk about that. DMM can feel out to find liquidity providers. But in this case, I'm getting filled on orders here. Like
Spencer,
so I lose my train of thought when he starts going felt.
Spencer, what's your new sign for today?
Right above my head here, right next to short my diet, Moses worked remotely. So I'll have one for Easter. I haven't quite figured out what the Easter sign is going to be yet. But
why did Moses work remotely?
Because he was trying to get to Israel, but the entire time he worked in the desert and elsewhere. So, I work remotely. It was a source of inspiration for me. If he could do it, I could do it. So I haven't quite decided what the sign will be for Easter yet, but I've got a few more days to figure that out. I'll try to get a bunny drawn if I can. I'm not.
All right, 8:14. Should we cover one stock before we bring on LaMonica?
Yes, let's cover Pinterest here.
Okay.
Near the top of my movers this morning, they gave some prelim guidance out, and it was good. They had some good things to say. They expect revenue for Q1 to be in the range of $269 to $272 million. That was above both the estimate and a revised estimate that accounts for coronavirus. So it was above both estimates there. They also said they ended the first quarter with $1.7 billion in cash and cash equivalents, no financial debt, and a $500 million revolving credit facility that was undrawn. So no debt, some cash, and good earnings or good revenue for the first quarter. So they had some good things to say.
It got hit again. If you're quick on these initial numbers, and that's what I'm telling you going into this earnings season, if you're quick, there's going to be some buy the dip opportunities there. And Pinterest actually went down $1 on this initially, got down to the low 14s. You'll see it was really fast. About a minute later, it was back to scratch, and then it started ripping higher. But we've seen this happen a few times with some stocks now. So I think there's a point here where there is a trade here to be had. And you know what? The buy the dip mentality is a little bit back here in this market right now. I know, we've been away from buy the dip, it's been sell the rip, but buy the dip has been working a little bit the whole time too. I think, after the 2-day rally that we had, just like I said, and now we get a significant sell-off. You got people this morning even here saying, oh, this is my opportunity, I'm going to get in. I'm not sure if they're going to be right or not, but there's some opportunities to be trading out of these, on these buy the dip opportunities again. So buy the dip, sell the rip continues to work. If you're buying that dip on Pinterest last night, immediately rewarded, not even like 10 minutes later.
Area of interest for me, pre-market high or the after hours high was 1734. I see a daily high at 1748. So to me, get up there, take out 1750, and then you got some open area there, a gap up to 1782. But very, very important for it to get out and take out that pre-market high at 1734.
All right, let's keep going until we can grab Paul here, and let's move on to what was the lead story for us on the pre-market show, which was TAL and just the weakness in some of these Chinese names here this morning. TAL Education, they came out yesterday after the close, and let me pull the chart up here first. And they said that they discovered some employee wrongdoing in their internal auditing process that accounts for 3 to 4% of the company's total estimated sales. And so you've got Luckin Coffee from a couple days ago, which never even opened yesterday. Yeah. And now you have TAL
still.
Yep, and TAL after the close yesterday. So
and then you had Muddy Waters accusing of IQ, which IQ got hammered on that. It did bounce back at the end of the day, but it's getting hit here again. Full disclosure, I do have a trading position IQ. Looking just a trading, just an overnight position. So, but I'm not going to talk about that. I'm just mentioning all three of those: LK, IQ, and TAL. So basically, the two confirmed so far, at least at this point in time, is TAL and TAL and
those stocks are hard to own. I mean, how do you own those things?
Well, that's the question. Yeah. I think, and if you're looking this morning, it's kind of a sell China thing here this morning. There's some institutional money managers after TAL last night. They're saying, okay, we don't know if there's multiple companies cooking the books over here or what's happening. But, and we're not saying, TAL is being investigated here too. Luckin Coffee is being investigated. We don't know all the details here yet. We just know that they might have been inflating revenues, both of these companies. Maybe LK to an extreme level, it sounds like. So you start thinking, okay, well, what can I trust in China? The market's saying guilty until proven innocent. If you look this morning, FXI, we're up 1%. FXI is down 0.63%. So there's 1.5% difference there. Alibaba is getting hit here just slightly, but last night it was down $8. So people were like hitting first and asking questions later. They're starting to, come back, some of these stocks, but you go across the board and the Chinese ADRs are all down. BIDU down significantly, PDD down significantly, JD.com down fairly significantly. I mean, on a day that you're up, all these stocks are trading down. I don't think it's a coincidence that TAL may have been the catalyst here. After Luckin Coffee, okay, well, one stock, okay, now you get a second Chinese company that sounds like they're inflating revenue. Now there's worries by the markets that there may be multiple companies that could potentially be inflating revenue.
Boy, this TAL really been holding up pretty well, all things considered, right? Getting hit today, they bought it right back up. I don't think the street is concerned about this one. Got down to 39 even. And now
last night?
Yeah.
On TAL, we got to 39?
TAL, yeah.
Because we're at 50 right now. So we've come back $10 from those lows?
Yeah.
Where's the chart, Spencer? I can't see the after hours chart. You'll bring it up.
One second. There we go.
Because when you get moves like this, as numbers, the chart tells the whole story. Holy cow. So did they say something? Maybe they're saying it's not true. Like a bounce back like that makes you think that, that they're saying something here.
Yeah. I don't know. I wasn't.
This is just an employee. So last night, so give us the headline here, Spencer. I mean, let's talk the actual headline here.
Yeah, the actual headline was they came out. So this is self-reported. They came out and
TAL is saying this themselves.
Yep, self-reported.
Okay, which is good news. This isn't like some companies under investigation. It's like they're saying this themselves.
So the segment in which the segment that was affected by this employee's auditing wrongdoing, that segment accounts for 3 to 4 of their total estimated sales, 3 to 4% of their total estimated sales. So not a huge segment of the business with that this employee's auditing may have screwed up.
Wow, did they ever hammer it last night though? Down to 39 bucks. I saw it in the 40s. I did not know it traded and down to 39. So obviously, investors coming in here, you're talking about a stock, to put this in perspective, that, basically in the year 2020, the lowest we've been here is 43. So we went from almost our high of the year to way below the low of the year after hours. So obviously market very scared that, hey, that we don't want to see any, wrongdoings or potentially inflating sales, but it sounds like it's just an employee. So maybe it's not that big of a deal. I don't know, but all I can tell you is last night, and maybe the TAL bounce back is why some of the Chinese stocks have bounced back too this morning, but there are still a lot of them that are significantly down. So investors are a little bit spooked about China right now.
Yeah, bounce right back up. It's just I'm looking at here at this 5150 area. You got a gap up to yesterday's low. Whoever scooped that up, perhaps all the way under, down to 39. Really quiet consolidation here, right at the $51 area. So you bust above 51. Maybe you get a chance to get into yesterday's range. The top of yesterday's range the bottom is 54.72.
All right, so I think that I gave Paul the wrong number to call in. So
Do we have Paul now?
joining us. Not yet, but he's joining us, I think, in a few. But I may have given him the wrong number, so my mistake here. So all right, so TAL weak, and like Dennis said, a lot of these names, the confidence is shaken now, right?
And the Chinese names, yeah, I believe it is.
And not Alibaba, right? I mean, Alibaba's down this morning too, but even the smaller names, like I would look at HUYA.
I would say Baba's back, but they were hammering Baba last night too. Bring up Alibaba. I own it in my long-term portfolio. I've also got on for a trade as well. So, I'm not going to talk technically about it, but I'll just tell you what it did. I mean, it got down to what? We got down to almost 190 last night. Where do we get down to, Joel? What's that low?
Let me pull it up.
191?
No, we got the initial spike, took it to 190 in a Q. And then when you came back, and it looks like it gave you a couple of shots under 90. You had a legitimate shot to get this under 191 for, at 1800 to 1845. Yeah. So what is that? 6 to 645. You had a good shot to get that under 191.
I would look at HUYA. I would look at BILI.
All those are getting hit here.
SINA, SINA, Weibo, WB. I would look at all of them this morning.
I was thinking of diversifying into some of these stocks, and I've been looking at them for a long time. But now
turns you off.
That was just kind of.
All right, look, a week ago on this show, I said I was interested in KWEB, KWEB, which is the Chinese internet ETF that owns like all of these names. So if you're gonna do it, that's how I would play it. I wouldn't buy a single one of them. I would just buy the whole basket and see where that gets me.
That's going to probably be down here today because obviously it's full of a lot of these names that we're talking about that are weaker here. It's offered flat here, but I'd imagine it's going to open a little bit down here. So all we're saying today, day traders out there, China stocks appear to be relatively weak to the overall market.
A couple notes here before we bring Paul on. S&Ps are just creeping up here towards the high of the session, 2680.50. We've just creeped up to 2674. That's up 32 handles. I just want to also point out crude has been a fade here, and keep an eye on 2350, folks. You got a pair of lows in crude at 2352, and from last Friday, 2354 from yesterday. That is the area you got to keep an eye on if you're trading the crude oil futures. And you know that those are at some houses they're double margin now on the crude oil futures, Dennis? Double margin.
I mean, with the volatility in there, obviously, they don't want people blowing out their accounts. So some of that's understandable.
You know what? The other thing, too, just kind of like an overall positive note, you did have that one firm, Ronin Capital, that kind of, went belly up during the expiration. But, through all the chaos, through all the up and down and everything, you really haven't heard those disaster stories that much as far, with the clearinghouses. So, considering the volatility that we had on both sides of the market, I consider that a very, very good thing for market structure and, just worrying about your money in your brokerage account.
All right, we've been talking about how a vaccine would drive this market here. We're getting some good news this morning from Novavax, NVAX. They announced that they've identified a candidate for coronavirus vaccine. They've also accelerated the initiation of their first in-human trial to mid-May. So we're getting to in-human trials now in 5 or 6 weeks, which is good news.
Yeah, we haven't really talked about what's going on much. And I mean, it is bad here in the Motor City. I'll tell you, in Detroit and the Oakland County area, we are getting hit hard. And, we haven't been talking much about that. But, and
Michigan's number 3, I believe,
yeah, I
on out
know.
of the states for most cases.
Yep. Yep. It's because of the auto companies, they do
Well,
it.
that's a consideration. Blue collar jobs, a lot of factory work. You think about how quickly it would spread in that environment. So I think you got a point there.
Yeah. Well,
I think there's a
also,
few things. I think there's
yep. Go ahead.
also I think we have I don't know, I know if this is true, but this is just what someone told me. We have a very large number of direct to China flights because
Yep.
of our manufacturing.
Yep. Yep.
Well, in Detroit, yeah, Detroit's a hub. You think about
Right,
Delta, it goes direct to everywhere.
right.
Delta's huge. So we're the
That
Delta hub.
that plus the fact you have a lot of low income workers, and
There's a
a
number.
lot of
Yeah.
people here with pre-existing conditions. So
And can I do a shameless plug here for my daughter? If my daughter Emily, if you guys want to see some photos of, she went to some testing centers yesterday. She had the full hazmat gear on, but she's been taking pictures of Detroit and testing centers and doctors' offices. She's been covering that for Bloomberg, so you can catch that on Getty Images. Emily Elconin, same last name as me, so. She's been covering a lot. She's got some amazing and I think there's going to be some videos on Bloomberg later on today. So shameless plug for my daughter there.
I want to keep on going here,
Yeah.
and someone asked us to talk about Tesla, to give us our thoughts. Tesla
We haven't looked
announced
at it for a while. Let's
no,
do a lot
Tesla.
of
We don't
tickers.
even talk about Tesla. Is it
they
a stock?
are
How
slashing
stocks move together.
they are slashing their employee pay and furloughing all hourly workers until May 4th.
It's still a loved stock, and it's going to bounce back quicker than even the rest of the market. And you can see, if you're just looking, it looks very much like the market. I mean, the chart looks virtually identical. All charts, we know when you get crazy movement like this in the overall market, stocks become stocks, so they all kind of move together. With that being said, if you look at the Ford and you look at the GM, they're still in the gutter, and Tesla's still $550. So I mean, it's held up fairly well considering. I don't know, the 900 run in January and February was just ridiculous. But you're back down here where you've never been able to do valuation on this. It's always been about the growth, so you can't analyze it even from a fundamental basis. But what you can analyze it is from a technical basis. And it's a storied stock, and it's a stock that's still loved, and I would still expect people to be buying the stock on pullbacks.
I'm looking at the bounce here, and it doesn't seem like it has the same kind of juice that the market had. I mean, I won't figure it on a percentage basis, but I guess 358, and you rallied a couple hundred points. So I guess it's just because it's so accentuated off that high. For Tesla and for these auto companies, I mean, I just think it's like, how long does this last? I mean, and also, it's more of an expensive car. I don't know. I don't want to, it is a cold stock and it is go up, but I don't see everything just, snap back, going back to normal, and people going out and buy expensive Teslas. And I think it's evidence there by them, laying off people. So, the longer this thing goes on.
They're not laying anyone off. They're furloughing their hourly
Furloughing.
workers, and they're doing a salary reduction for everyone else. Let's get our guest thoughts on this. Paul LaMonica is a digital correspondent at CNN Business. Paul, good morning.
Hey, good morning. Sorry to be a couple minutes late. The joys of working from home and not getting the conference call to work properly, but I'm here now.
Yeah, I think I gave you the wrong number, so my apologies. But yeah, also, I mean, you've been working from home with the rest of your family and your kids now for the last month. So, I mean, how's that going? You have young kids?
Yeah, I do. It's challenging, I think, for everyone. Obviously, I mean, the new normal now is that everyone, for the most part, that is in, I think, a services sort of industry that can work from home, they are working from home and really trying to do everything that they can. The big problem, is that obviously I think life is extremely challenging right now for obvious reasons, and I think for a lot of people, just managing the work-life balance has become more difficult because you're just home all the time.
So we were just talking about Tesla here. Joel's
Yeah.
point. Joel's point is that he's not sure how fast consumers can snap back and start buying Teslas again. What are your thoughts on that?
Yeah, I mean, I think that clearly, the one positive for a company like Tesla is that, clearly because of the Model S and Model X being a little bit higher end luxury cars, you may still have consumers that are more affluent being able to still buy those vehicles. But Tesla is really trying to go into the mass market with the Model 3, the Model Y, and also, in China as well. And obviously, Chinese consumers, I think it remains to be seen how quickly they rebound from, the effects of COVID-19 since it began there. And, now you'd have to imagine that, people aren't really driving all that much in particular parts of the country here in the U.S. because of various quarantines and shelter-in-place enforcement. So, I think a lot of people that have a car are probably going to stick with the one that they have for the foreseeable future. I don't see much demand to upgrade for a pricey. Still, even though the Model 3 and the Model Y aren't as expensive as the S and X, I mean, it's still not the cheapest car in the world.
Yeah, and to your point, I mean, the Chinese authorities just reopened the Wuhan, where this whole thing started, just yesterday, or I guess Wednesday. So today.
Yeah,
Um,
it is way too premature to figure out what's going to happen
right,
in all of China, let alone Wuhan.
right, exactly. But that's how long it took. It took. They've been on lockdown since mid-January, so it's taken 4 months here. Uh, for the lockdown to even get lifted, and now we're going to see how they get back to normal, and hopefully that could color how we could get back to normal. That's kind of my point.
Yeah, I think the playbook people are hoping is that some of the numbers that we've seen coming out of China have been surprisingly strong. Of course, I don't think you need to be the most skeptical person in the world to have some legitimate questions about the veracity of those numbers. So, I think a lot of people are going to be happy about the fact that China's economy seems to be rebounding and hoping that that can play out here in the U.S. The thing that I find problematic with that argument, not just the whole notion of can you trust the Chinese data, the thing that I'm worried about here in the U.S. is that people may get duped into thinking that the worst is over because you're going to see certain cities that have been hit hard, like Seattle and New York, that may come out of this a lot sooner than the rest of the country. And that's going to be, I think, something that people may feel like, oh, well, great, the numbers in New York are starting to look better. But, you're going to see this, virus spread to other parts of the country just through the natural course of how this has progressed.
I'm with you. Yeah. What about places like Georgia? What about places that haven't really been hit hard yet? The economy, we are the economy in the aggregate. It is all of us. It is not just the big cities in New York and Seattle or even Detroit that's now been hit hard. It is everybody. So I'm with you on that. Joel, I think you wanted to jump in here.
Yeah. We're on the line with Paul LaMonica, a digital correspondent for CNN, one of my favorite files on Twitter. Help me out here, Paul. I'm thinking about like the economy, and I'm thinking about all segments of the economy, and I'm thinking about the television and the entertainment and the networks and just the loss of revenue from sporting events and the loss of potential advertising. I mean, there's going to be a ripple effect that, I think to me is going to be almost, I mean, when are sports coming back online? Are we going to have a football season? I mean, there's just
Yeah,
so
those are
much here.
legitimate questions.
How help me get over that. Help me say, okay, the TV business, the broadcasting business, they're still going to have the advertisers, they're still going to have this, and that I shouldn't worry about it.
Yeah, I mean, I don't think. I think there are people trying to make the argument that we are going to have brutal numbers for at least, the second quarter and third quarter, and that maybe things rebound in the fourth quarter in 2021, and it's such a strong rebound that we wind up looking back at this as a very, very particularly brutal time, but that we ultimately get through it. I think that might be a bit of a mistake. I don't think you're just going to see people turn on the spigot necessarily. I think it will be a slow, gradual rebound, much like what happened after the Great Recession. I mean, remember, it took a long time for the U.S. economy to recover from that financial shock. And even though the good news here is that, hopefully banks can do their part, especially if the SBA, Paycheck Protection Program really, some of the quirks start to end there. Banks are well capitalized now. The financial system is not the problem, which is a good thing, but you have so many struggling small businesses and companies in industries, the airlines and travel related sectors that are going to be hit so hard. And, we're already talking about how we need yet another round of fiscal stimulus, even though we've already got a couple of, packages passed. And of course, the Fed has been doing everything it can from a monetary standpoint.
So there are so many aspects to this crisis here. There's the health aspect, there's the economic aspect. I just wanted to go down a hypothetical for a second here. Let's pretend that cases are starting to decline or at least plateau, and things are looking better from a health standpoint. And now businesses are having to entice people, consumers, to go back to their lives. I saw Bob Iger said yesterday that they may check temperatures. They may require, in order to get admission to Disney World or Disneyland, you may have to get your temperature checked. Paul, with something like that, would that make you more likely to want to go to Disney World after assuming again that cases are going down and things are looking better from a health standpoint?
Yeah, I mean, if trying to make sure I got the question correct. I mean, it sounds like if companies are going to be more stringent and try and ensure that you don't wind up having someone who is potentially sick coming into a very public place like an amusement park or a movie theater, I'd have to think, and this is just me speaking personally, I'd like to think that most people would be in favor of such practices and not really be upset about it. I mean, just anecdotally, firsthand, I mean, it seems like people are adjusting, at least from what I've seen in New York, and are, understanding of the policies. I mean, people are walking around with face masks and not, looking as if that's an odd thing. I think now it's almost the opposite, that if you're not wearing one, people kind of, squint and wonder what's going on there. I mean, when you go to places like a Walgreens, if you need to go to a drugstore or any other store where they're only letting in a couple of people at a time, no one's really complaining about it. I think most people get the severity of this, especially in areas where there are, many cases and people know people who are sick and see the hospital system under strain. Maybe there are parts of the country that still feel this isn't that big of a deal yet, but that's, I think, silly, to put it mildly.
Yeah, and companies are going to have to bend over backwards to try to entice consumers to come back and spend money. So that'll be something to watch for in the coming months, assuming again once we get this virus under control. Paul LaMonica.
Wait, can I throw one more thing in there?
Yeah, go ahead.
Of course, yeah.
How's it going with the kids, man? I gotta ask. You got how old are the little buzzes there?
6 going on 7 in a few months, and 10 and a half. They are both currently on their tablets, taking a little bit of a break before school starts up. So but
your school,
are
you homeschooling them, or is your
no, they're doing virtual school.
Okay. How's it going?
My wife is, it's tough. It's not easy.
Okay.
Probably for the best.
So the little one sitting next to me and is mimicking me right now. So
man, we gotta get you on video next time, man. I love kids.
That's a hard no.
Paul, stay safe out there.
I do video for CNN
Yeah.
and CNNI when they ask me because they're my employer and they pay me.
Right.
I'm not suggesting you pay me for these, but for these interviews, radio is, the phone is the best you're going to get from me.
All right, Paul,
Especially in this situation. Thanks, Paul.
yeah, stay safe
Thank
out
you.
there, Paul.
All right. You too, guys. Appreciate it.
All right. 8:40 here now. Yeah, I want to get your guys' thoughts on that. So let's pretend that cases are going down here. Hypothetically speaking, if you knew that everyone who went to Disney World was going to get their temperature checked, would that make you more likely to want to go?
It's absolutely ridiculous. The temperature check thing is just silliness because if you take an Advil or a Tylenol, your temperature goes down. So if you're going to Disney World and you want to skip that, okay, well, pop a Tylenol an hour before and your temperature is going to be fine. It's not like you have a temperature no matter what. And you know what? If you have a temperature, you're probably going to take Tylenol because you're probably not feeling well. So the temperature checks that they're putting on everywhere is going to catch like 2% of people that are potentially sick. And if you're really sick, I hope you know the majority of people would just stay home anyways. So it's all just ridiculous. I mean, doing a temperature check coming in is basically doing nothing, in my opinion. Yeah, we know, like, if you don't feel good, you're going to be taking some type of, Tylenol or Advil or something, or Motrin, which is going to drive your temperature down to make you feel better. So, and regardless, I would think the majority of people wouldn't probably go to Disney World if they're not feeling well. So I wouldn't think it's like, oh, I got COVID,
Right,
but I'm still going to go to Disney World. I mean,
well,
most people are good people. So it's
right.
it's a waste of time checking temperatures, in my opinion.
Okay,
I see it
but
at the airports. It's a big waste of time.
The question was, would it make you feel better if you were already going to go, or
No,
would it make you?
None, because I like I just said, I would hope that most people, if they really are sick or if they had, an illness, they're not going to go to Disney World. And secondly, if there are, if they're thinking, okay, I still want to go to Disney World, they're just going to pop a Tylenol beforehand. You're going to catch almost nobody doing that. I want to know those airport checks. How many of those airport checks, caught people and they're barring, oh, this person's got a temperature. Okay, well, we better, not allow them on the plane. How many people? I really want to know, because you're sitting there at those airport checks and you're making everybody wait longer because, you're analyzing all this stuff. So people are breathing each other's air longer, queuing up, because of these increased checks to make sure nobody's sick on the plane. You're probably making people sicker in the airports. I think it was just ridiculous, the temperature checks. I don't think it accomplishes anything. That's my opinion.
All right,
Joel, you have thoughts on that? You have a doctor. You have a doctor.
Tell us how you really feel.
You guys, all right. I'll just say that.
I think Joel's with you.
Do you think the temperature checks help?
Okay, just let me say this. Okay, I'm buying my Michigan football tickets for next year.
Sure.
Okay.
Does it make you feel better if everybody gets their temperature checked as they come in and you're going to wait in that line longer?
I don't know if I'm going to go to any games.
You're an exception. I'm going to tell you, you've been saying that, Joel. Maybe people are going to be spooked to go to a game or not, but I think once we get the all clear, I'm very spooked by this, but I would love to still go to hockey games. I love watching, baseball game, hockey game live. I love it. And I would still go. Maybe you're looking at it and maybe there's going to be the odd fan that's going to say, but once we get like the virus is gone and we're confident that, we're on top of it, I would hope a lot of people, yes, there's going to be some people who are still spooked and they may be a little bit hesitant to go back, but and maybe you've got a point. Like maybe there is going to be some people that aren't going to go to a sporting event anymore, but I think people are still going to watch sports. I don't think it's going to be like I would love to watch sports right now. I hope, the baseball season gets started. I hope still that we have potentially an NHL playoff somehow, even if the fans aren't there. Is it a question that the temperature check though, Joel? That's what's
Does that
make you feel more confident?
No.
Yeah.
Nope. It doesn't. It doesn't, because it's easy to mask that. And,
so easy.
Yeah. So I mean,
and I would hope that most people are good people. And if you really are sick, you're not intentionally going to a game and trying to spread it, or just so I want to have fun. And if I spread it, so be it. I would hope most people don't do that. I would think 90% of people at least, if they're not feeling well, they're not going to go to the game because it's just, out of respect for all those people around you. So again, by checking everybody's temperature at the door, what are you going to stop? There's going to be 20,000 fans that come into the, a sporting event, and if you're looking at, like a
Yeah, it'll take
football
forever
game,
to get in.
60,000. Take
100,000,
forever.
115,000.
And then you're going to stand and you're going to have everybody queued up longer so they're close to each other, breathing each other's air. It's going to make more people more sick. So I am dead set against these temperature checks that they're doing,
I don't know
because
what
I
I don't
don't
know
think
what
they
else you
catch it.
do. I don't know what else you do besides just hope.
There's nothing you can
Cross
do.
your fingers. Cross your fingers.
That's
I
all
guess.
you can
I
do
mean,
is like
yeah.
just tell people stay home. It's a little
Yeah.
bit of the trust system.
Yeah,
I mean,
I know.
let's get back to stocks. S&P's creeping up towards the high of the pre-market session here, 26.80.50. We're only 5 points off that. Heading into the open, looks like we're going to have a pretty green open here.
very strong.
Yep. Resilient market here. We talked about Zoom, and I'm looking at that. We talked about maybe getting a shot at $100, but I don't know if you're going to get that. You got a pair of lows under 110, 08.53 and 09.57. You're $5 off that, so still kind of in the lower quadrant there. So if you're looking at that for a swing trade or a bounce, you got to make sure that 108.53 holds. If not, I think you will get a look at 100. Not really rallying out with the market. You just tell people are squirming in this a little bit. You had the big decline off the highs. You've had, let's see here. Holy moly. 1, 2, 3, 4, 5, 6 lower highs. So you need to break that string at least until you get a rally here in shares of Zoom.
Inside day yesterday, that low is very important that Joel's talking about, that 108, because he kind of tested a little bit yesterday, 109.57, passed the test to a certain extent yesterday. If it takes out the 108, I think you see $100. That's a line in the sand. So if you're coming in here and saying, okay, I think the 108 holds, you're buying at 114, you're risking yourself $6, I would stop out below 108. Again, these move opposite to the market to a certain extent, so don't expect, just because you have an update that Zoom necessarily is going to be higher. I know it's trading higher in the pre-market, but they have been moving with a negative correlation in the market for a while. That and Teladoc, those are the two stocks that continue to pair trade together. TDOC, Zebra, Michael.
And just real quick, the reason you say you would put your stop out below 108 and not at 108 or even above 108,
you give yourself a little room.
Right.
Yeah, like that's the thing about stop placement, and we don't talk about that a lot. But if you put them in predictable spots, you get stopped out more often than not. So it's tricky. I mean, and Jeremy Newsom is fantastic at this, talking about this. Like he'll look for those situations where, okay, they're going to take it through this, they're going to stop these people out. Now I'm going to buy it. So you get like, the take out of the lows, and then you get back above it, and he puts on those for trades too. So I mean, you've got to really, the stop placement's got to be, you got to be a little bit looser with it. I never like to have the physical stops out there. So the day traders that trade all day, I like to have mental stops but in this market, there's, a lot of trends going. So, I mean, it's all about, finding the trend of the day really to be, yesterday was tricky because you're way up and then you ended up turning down. But in a lot of days, we've been fairly trendy. So if you can get on the right side of the trend, and you're buying pullbacks, and you just, it's been working. Trend trading has been working on a day trading basis besides yesterday.
All right, I want to talk FedEx and UPS here. Both are trading up this morning on a headline from Amazon that Amazon is suspending its third-party delivery service that is only for non-Amazon packages, meant specifically to target FedEx and UPS's business. They will be suspending the service in June.
And is this a temporary thing, or is this like a permanent thing? Because this has obviously been a fear for UPS and FedEx for a long time. Full disclosure, I do own FedEx in my long-term portfolio. Do we know if this is just like a COVID thing, like they're suspending it going, or is this going to be like a permanent thing?
I think this is a temporary thing.
Okay, so in any regard here, it is good news for FedEx and UPS. Both of these stocks are trading higher here this morning. UPS trading up 4.4%. FedEx also trading up 4.8% here this morning. So big moves here for both of these stocks. You could see some follow through here. I mean, it's tricky. I hate buying stocks up 5%. I've always lost a lot of money when I'm chasing. So, but if you're in them, maybe you see how they open. The open will be key. If they open these things and they start to leak right away, then you get concerned. Like 3M yesterday, I was talking, and I was saying, I'd be a fader of 3M. It actually had a little bit of follow through in the morning, and then it eventually, after 11 o'clock started to roll over and then give a lot of it back. So, it's tricky sometimes to just come in here and fade these moves because sometimes they can sustain. And this has been a worry about UPS and FedEx for a long time. So I think I would lay off. I don't think it's an easy call to just short this thing's going higher. So I'm kind of like, if I was in them, I'd probably try to ride it a little bit. But I don't want to say, these things are going to give it back.
Well, long term, I mean, this FedEx has been bad long before the COVID-19
Oh, for sure.
crisis. Yeah. So, from a long term perspective, I have no interest in it. Shorter term perspective here, you did get a little pop. You found someone willing to sell stock at the 123.78 area. That's $2 away. So you better get up there. You better take that out. You better keep on going, or else this thing could easily roll over. My next target after that would be 125.48. But first things first, let's take out the pre-market high. UPS, I mean, it's hung in there a little bit better on a relative basis than UPS. You just, you had that actually bottom in March, I think a little bit ahead of the market. That's trading up 409. That's kind of at the highs of the session at 97.20. Currently trading 97 even. What do you have on the dailies? Let's get through 97.45. That was actually the high from yesterday. So they're trading up, but haven't even reached yesterday's high yet. Make sure
it's a nice move, though.
Yeah, it is a nice move. If I had them and I saw all this news on a short-term trade, I'd be very hard not to ring the register.
All right. Any questions in the chat? Drop those takers in, and we will take a look. I'm going through my list here, trying to make sure I covered everything from my list this morning. Only one I didn't get to for my list was Benzinga. This is one that, full disclosure, I've been along for a little under a year at this point. They gave some guidance this morning that was good. They're a 5G play.
Yeah.
And they said that they expect their Q1 sales to be above the range. They're previously given a range on the estimate. So good guidance here this morning from Benzinga. That's the reason for the pop up to $8.
They kind of said this on CNBC a little while ago. The CEO was on CNBC and they said the numbers were going to be good.
Yeah.
So we kind of knew that already, but this market likes to rally it twice on it. So it rallied when the CEO said it on CNBC, and now it's rallying here again. It's been a nice move. It's been a nice move for Benzinga, a nice comeback. We were at $4 3 weeks ago. It's basically up 100% in 3.5 weeks. If you're buying it now, I think you're doing it backwards. So, I like the story here, the 5G story. Matt Kolb's been all over this. He's done very, very well with it. He's from Benzinga, and he's been talking about the fundamentals of this company being very good. A lot of us traded it. I was in it for a while as well. I'm all out of it now. It's had a nice bounce back though. I have trouble buying it here at 8 when it was $4 3 weeks ago.
812 is your pre-market high. You just made that on the initial news. The real interesting area for me is just under $9. You had a pair of highs at 882 and 889. So that's a long ways to go. I don't see this up another stick at that area, but if it is, I think that'd be a good opportunity. Maybe someone targeting the whole $9 area, but trading at the highs of the pre-market session. So I think that you could continue higher. Just don't know if you got enough gas to get it up to that 880. SPOO's made a run at the high of the pre-market session, 26.80.50. We were just turned back here at 26.77.75. That was on the last 15-minute bracket. So I don't know. I think, we got 2 days until Good Friday. The markets are closed. It kind of feels like we're calming down a little bit, and maybe, a little bit more range trading than, these huge moves. But in this market, anything can happen. But just keep an eye for follow through on that pre-market high at 26.80.50.
I think you're right with the calming down and, coming into Easter, and we're closed Friday, right?
Yes.
Yep.
Yeah, so you only got a couple days here left. I mean, there's a good point you're making here, that maybe we're going to be a little bit calmer here for a couple days, and I think we could be range bound. I do think you'll get support down near 260. That's where we kind of broke out from a couple days ago. So, old resistance becomes new support. So I think, if you fall 40 or 50 handles from here, I think you find significant buyers down that 261 to 262 area. You also probably find sellers near yesterday. You start getting the 270s. People are like, oh, I didn't lighten up yesterday. I want to lighten up today. So I think your range is 260 to 270 on SPY. That's where I think traders are going to be selling up near 270, buying down near 260. Maybe you play that for a couple days, and maybe you're right. Maybe we do calm down for a couple days here, Joel.
A couple days last week, we had 100-point range and we had 130-point range. Yesterday's
Joel's
range,
talking the overnight range, like the whole true range, not just talking the intraday range. So some people look at you and you're scratching your head. What do you mean? But when you look at that overnight range, a lot of things happen at midnight.
Yeah, a lot of things. And then so yesterday we came down to like 125. So tighter ranges, that's good for the market. I just, the average 9-day average true range got up over 200 for a while, and you need that to calm down. So I think that also bodes well for the market. But of course, anything else, things can always change. I Am Wall Street is asking about EHTH, and I have no idea what that is.
What is the symbol again?
EHTH.
eHealth.
Oh, eHealth. Yeah. We that's another COVID. It's been a COVID play for a while. It's getting hammered. Wow.
Yeah,
what's
just
happening
muddy
there?
waters.
Muddy waters throwing a little mud on it.
Yep. It's this is a tough one. I mean, it's been a COVID play. It's had
it's been holding up well.
I don't know. This one's pretty wild here. You had the news must have been out yesterday or something. When was this out?
Well, it's down another $20 right now. It looks like it just came out to me.
Let's see. I don't know.
This looks like this is trading rapidly right now. This looks like it's got news all over it right now. So maybe
I'm looking at the wrong session here.
I want to see if Muddy Waters is tweeting.
I think they were just on CNBC.
Is that why they talked on CNBC on it?
Yeah. It must not have said anything good.
8:40. Now Carson Block will be on CNBC at 8:45 this morning. Yeah, to announce. Okay, so he just was on to announce a new short cutting through highly complex accounting to reveal a major league stock promotion. They're talking about right how eHealth. So it's right on CNBC right now. He's just announced that this is his new short. I mean, this thing got hammered yesterday, so I don't know who that gets the memo from what yesterday.
No
Anyways, we didn't get the memo yesterday, so it's down another $17 here this morning, but hammered yesterday. Now they come on and they're shorting it again. I've always been, Muddy Waters and Citron and stuff, the way that they do things to put on the big shorts and then they come out and promote the short. I've always thought that was sketchy, but I mean, it's just talking your book.
It is what it is.
People are allowed to talk their books, so there's not much you can do about it, I guess.
Well, for you that want to venture into this stock, $95, we just hit that, and we got a slight bounce going on. And then if you go back to March when the market was bottoming, you had a low at 94.81 and 95.47. So call that an important area. If in fact you lose that level, maybe you get a look at 89.92. That was your low on March 18th, but they're pounding. I mean, these things are tough. The company comes out, defends it with a statement, it goes back up, but keeping an eye on 95.
I asked for some tickers and didn't actually discuss any. Let's look at Cisco here.
Cisco Kid.
Cisco meaning Cisco CSCO, not SYY.
Not the food stock.
Not the food stock.
Okay. Trading up 23 cents here. Just a slow climb up. Where are we at? We're trading 40.87. Well, yesterday's high was way up at 42.74. I don't have a good read on this one, Dennis. You got a good read on this one?
I own it in my long-term portfolio. It was an ugly candle yesterday. A lot of stocks had reversals yesterday where they opened high and then they closed very weak. That's never a good sign. The whole market did that. So this obviously just looks like the whole market. I think you find sellers now if you get back up to 42. You get back to 41 this morning. I mean, you get back up near the upper 41s. I think there's going to be sellers in this thing now. They obviously hold up better. It's a lower beta stock. It's not a stock that gets absolutely hammered like some of the higher beta stuff. It's got some dividend protection too at 3.52%. I own in the long-term portfolio. It's been a terrible one. I think I'm in from 49 or 50 bucks or something. I had bought it middle of last year, and it's been a terrible investment so far.
All right, real quick, let's just bang a few out here. Disney, that's been holding in there. Trade
Downgraded
down
today.
Yeah, it did. Oh, look at that. Got back to 110. Huh. Not quite 110. 107.73. So $6 off that high. 105.89 yesterday. So there's you want to get back over those highs for this move to continue. Yesterday's low, a little bit of a trapdoor under yesterday's low, 10025, and then you fall off to 94.42. 94.52 would be your next daily low. But I think if you breach 100, I don't think you're going to quite, just kind of the way the market's feeling today, I don't think you're going to get a look at that. You want to get, if you want to play it from the long side, you want to see it get green, maybe you can lean on yesterday's low. But here's a stock just caught in the crosshairs of this whole COVID crisis.
Love the company, love the brand. It is caught in the crosshairs, like Joel is saying here. I just don't, see everybody running back to Disney World, even if they are getting their temperatures checked. So attendance could be weak for a while. I almost think of it like the Chipotle thing. Disney World is a place where everybody comes from all over the world. If we're all allowed to go out, not everybody's going to run back to Disney World right away. So you think like park attendance could be weak for the foreseeable future. Like I'm thinking like, a year after this, it could still not be back to where it's normal. So that makes me somewhat concerned. And parks, Spencer's looked this up before, it's about 25% of revenues. Obviously, they have a lot of other businesses, but with that being said, it's hard to just jump back into something where people are all congregating. Even like Joel's analysis with, are we going to sporting events? And you think about MSG and you think about, is this a stock that I just want to go buy? Is everybody running back to go to their sporting and their concerts again? There could be some hesitation there. So I think there's better places for your money. Like I've said, the stocks that I've been buying on the pullbacks are the stocks that, aren't in ground zero for this thing, like the tech stocks, which everybody's still, like is playing video games. I've talked about, I bought Activision Blizzard again, obviously had an ugly day yesterday. It's almost been moving counter to the market. It's interesting. Some of these stocks, start moving counter to the market, the gaming stocks, but, I bought Microsoft. I've nibbled into a few different stocks here, but I'm nibbling into not into the cruise lines and the casinos. And I hate to throw Disney in with that because it's got so many other good businesses. It's such a good brand. It is going to survive. It's just a matter of how long is the revenues going to be depressed for. And that could take its time. So I don't think you need to hurry to get into Disney.
All right. That'll be a wrap. Put a bow on today's show. Want to thank our guest, Paul LaMonica. Thanks to all of you who joined us in our chats on YouTube and premarket.benzinga.com. Catch the podcast of this show or the replay on YouTube. Joel and I will be live with you at 3:40 until the close. In the meantime, please remember all the information from our show meant to be used as informational purposes only, not for investing or trading advice. And I guess that's it. So for everyone celebrating, happy Passover. And Joel and I will be back with you at 3:40. And Joel, Dennis, and I will be back with you tomorrow at 8 a.m. Have a good one.